Very happy morning to all. Sir, we are in the verge of completion of assessment of partnership form, a Redwick AOP or BOI. In that residential status of partnership firm, we have understood. There are only two classifications are there, resident or non-resident. Whether resident or not is based upon control and management. If the control and management is wholly or partly in India, that partnership firm is a resident. If the control and management is wholly outside India, then that partnership firm is a non-resident. What is the tax rate applicable to partnership firm? 30%. What is the surcharge applicable? Partnership firm nale 12%. Because interest on capital 12% and surcharge also 12%. What are the special provisions applicable to partnership firm? The special provisions applicable are section 184. In order to assess you as partnership firm, you should satisfy two conditions. Then we are having section 185, the consequences of section 184 not satisfied. Then we are having section 187, 188, 188A and 189. 187, 188, 188A and 189 is talking about special circumstances or special provisions applicable to firm. At the time of assessment, if the partnership firm has been reconstituted, the assessment order has to be passed in the name of the reconstituted firm, but the partners who were during that previous year is jointly and severally liable as per 188A. And in case of dissolution of firm, you have to pass the assessment order as if no dissolution has been happened. Like that special provision we have discussed from this category. Now I am moving into the next two very small area, 40B and 78 subsection 1. We have to understand that if the assessee is a partnership firm, two additional expense can be debited to P&L account, to interest on capital and to remuneration to partner. Sir, interest and remuneration paid to the partner by a firm are not deductible. That is, to the firm to the partners by a firm are not deductible. However, interest and remuneration paid to partners by a firm are deductible if the following conditions are satisfied. Sir, my dear lovable students, if these conditions has been satisfied, both interest on capital and remuneration to partners can be debited to P&L. Number one, payment of salary, bonus, commission, remuneration by whatever name called. Hereinafter referred to as remuneration. Inime namadha remuneration solvom. So remuneration can be debited to P&L account. To a working partner. That means, are you paying remuneration to the working partner? Then that can be debited to P&L account. If it is paid to a non-working partner, same to be disallowed. So what you have to check, is the remuneration paid to the working partner? Then allowed as a deduction. If the remuneration is paid to a non-working partner, then not allowed as a deduction. Explanation. Working partner means an individual who is actively engaged in conducting the affairs of the business or profession of the firm of which he is a partner. Who is running that business, that guy is called as working partner. Is the partnership firm paying remuneration to that working partner? Then that can be debited to P&L account and that can be claimed as a deduction, my dear lovable students. The payment of remuneration to a working partner and payment of interest to any partner should be authorized by and should be in accordance with the terms of the partnership deed. That means it should be as per the partnership deed. So the remuneration should be paid to a working partner and that remuneration should be authorized in the partnership deed. The payment of remuneration and interest should relate to a period falling after the date of the partnership deed. That means it should be on a prospective basis, not on retrospective basis. That means partnership deed should not provide for payment of remuneration and interest from a retrospective effect. That is any earlier period to the date of the partnership. So in order to claim remuneration as a deduction while calculating the PGBP income, PWD condition should be satisfied. P stands for period. Period should be after the partnership deed date. That means it should be on a prospective basis. It should not be on a retrospective basis. Such a remuneration should be paid to a working partner and it should be authorized in the partnership deed, my dear lovable students. Now the question for understanding whatever we have discussed. The partnership enters into a partnership agreement on 1/4/2023 and no salary was provided in the deed. That means in the partnership deed, remuneration is not authorized. On 31/1/2024, partners enters into an agreement to amend the above deed with retrospective effect from 1/4/2023 to provide a salary of 3,000 each per month to each partner. That is not allowed because period should be after the partnership deed date. Salary paid to partners for the period from 1/4/2023 to 31/1/2024 shall not be allowed as a deduction to the firm. Salary paid to partners for period from 1/2/2024 to 31/3/2024, that means for February and March, that is 2 months remuneration, shall be allowed as deduction to the firm subject to limit specified in 40B. That means in order to claim, my dear lovable students, remuneration as an expenses, 2 conditions should be satisfied, 3 conditions should be satisfied. PWD condition, period should be after the partnership deed date. W stands for that remuneration should be paid to a working partner and it should be authorized in the deed. I'm moving into illustration number 2. A and B enters into a partnership on 1/4/2023. Partnership deed provides salary of 3,000 per month to A and 4,000 per month to B. That's it. On 1/7/2023, an agreement is entered to amend the above deed retrospectively from 1/4/2023 and provide salary of 6,000 per month to A and 7,000 per month to B. That is not possible. So they are having 2 partners, A, B. They are having original salary, A 3,000, B 4,000. But after certain point of time, they have retrospectively made a change for A 6,000 and B 7,000. So my dear lovable students, for April, May, June, because in July only they have changed, sir, for A and B 3,000 and 4,000 will only be allowed. But from July onwards, sir, prospective will be applicable, 6,000 and 7,000 will be applicable. For the period for 1/4/2023 to 36/2023, salary paid to A and B shall be allowed as deduction to the firm to the tune of 3,000 per month to A and 4,000 per month to B. Thereafter, the enhanced salary paid shall be allowed as deduction, but the above deduction shall be limited to the amount specified under 40B. The payment of interest to partners should not exceed amount calculated at the rate of 12% per annum. Simple interest, that is any amount in excess, should be disallowed. So, what is the limit for interest and remuneration? 40B subsection 4. The payment of interest to a partner should not exceed the amount calculated at 12% per annum. Simple interest. Any amount in excess would be disallowed. Fantastic. So, to the P&L account in the partnership firm, to interest solely at the rate of 12%. If you are paying interest at the rate of 15%, that extra 3% should be added back. Next one, 40B subsection 5, that is payment of remuneration should not exceed the following amount, that is any amount in excess will be disallowed. On the first 3 lakh of book profit or in case of loss, 1,50,000 or 90% of book profit, whichever is higher. That means on first 3 lakh rupees, my dear lovable students, either 1,50,000 or 90% of book profit, whichever is higher. On the balance book profit, 60%. So, what is the understanding? Interest on capital maximum 12% is not allowed. 12% மேல PL account debit பண்ணேனா will be added back. Whereas remuneration to partner is based upon book profit, first 3 lakh balance. First 3 lakh 1,50,000 or 90% of book profit, whichever is higher. 1,50,000 loss for a time use பண்றது. Whereas balance 60%. Sir, what do you mean by book profit? Already நம்ம 115 JB ல ஒரு book profit discuss பண்ணியிருக்கோம் இல்லையா? Book profit means the net profit as per statement of P&L for the relevant previous year. That means net profit as per P&L account. Computed laid down in the manner 28 to 44D. Whatever PGBP adjustment we are supposed to make, all that PGBP adjustments we have to make as increased by aggregate of remuneration paid or payable to all partners of the firm if such amount has been deducted while computing the net profit. In case already நீங்க P&L accountல remuneration to partners debit பண்ணியிருக்கீங்கன்னா that should be added back because நம்ம calculate பண்ண போறதே remuneration to partners தான். So அதனால that amount should be added back. This is what explanation to section 40B. Explanation 1 to section 40B. Explanation 2 to section 40B. Sir, this is the summary. Interest and remuneration to partners of the firm 40B. Interest on partners capital, remuneration to partners. Interest on partners capital condition, payment should be authorized by the deed. That means in order to claim interest on capital as deduction, you should satisfy DIP condition. The condition is DIP condition. You should satisfy DIP condition. Payment should be authorized by the deed. And interest, maximum rate of interest should be 12% simple interest per annum. And it should be for the period falling after the date of partnership deed. So these are the three conditions should be satisfied, my dear lovable students. So DIP condition should be satisfied. D stands for the deed, I stands for interest at maximum 12%, and P stands for it should be for a period after the partnership deed. What are the remuneration to the partners? Already told, PWD condition should be satisfied. P stands for payment should be authorized for a period. It should be for a period falling after the date of partnership. That means only retrospective effect கிடையாது, only prospective effect. Payment should be to a working partner and payment should be authorized by the deed. So PWD condition, my dear lovable students. Book profit means after interest on capital. That means interest on capital can be debited to P&L account, but before remuneration to partners, any remuneration to partner debited to P&L account should be added back. Explanation 1 to section 40B. Where an individual is a partner in a firm, this is very important explanation. Where an individual is a partner in a firm on behalf of, for the benefit of any other person, that is called as partner in representative capacity. So we are going to talk about, my dear lovable students, sir, explanation number 1. Okay, sir, what explanation number 1 is saying that I am an individual, I am a partner in a firm. Now the firm partner are in a partnership firm, sir, I am a partner. In a partnership firm, I am a partner. As what I am a partner? Partner in a representative capacity. Partner in a representative capacity. That means I am representing some other. I am representing some other person. Fine. Any interest paid by the firm to such individual otherwise than as a partner in a representative capacity shall not be taken to account for the purpose of 40B. That means I am an individual, I am a partner in a partnership firm as a representative capacity. In my individual capacity, I have given a loan to the partnership firm. Then what this section is saying that explanation 1 is saying that that interest should not be counted for computation of 12% interest as per 40B, or interest paid by the firm to such individual as partner in a representative capacity. Interest paid by the firm to such individual as partner in a representative capacity, and interest paid by the firm to the partner so represented shall be taken into account for the purpose of 40B. So explanation 1 is saying that, sir, there is an individual, that individual is a partner in a firm, partner in a representative capacity. 2 type of interest the firm can pay. Either, sir, that partnership firm can pay interest to the, sir, that individual as representative capacity, or interest to that partner as other than representative capacity. Interest to individual as representative capacity, my dear lovable students, then it should be treated it should be treated as interest for the purpose of section 40B. Interest to partners as other than representative capacity should not be treated as representative capacity, should not be treated for the purpose of 40B. For the purpose of 40B. Sir, I need one example, sir. Read this example. X is a partner in a firm. For example, Mr. X is a partner in a firm in representative capacity and on behalf of his HUF. So, HUF represent panni, நீங்க ஒரு partner ஆகிங்க நினைச்சுங்க. Suppose the firm pays interest of 6,000 X in his personal capacity and not his capacity as the representative of HUF. It will be allowed as deduction and prescribed ceiling will not apply. For example, Mr. X has given loan to the partnership firm in his individual capacity, not as representational capacity. Then for that interest, don't bring the limit of 40B. Even it can be more than 12%. Normal concept only. However, if such payment is made to X as a representative partner, or if the firm has paid the interest directly to the HUF, then the payment will be subject to conditions as ceiling limit as prescribed. But if that interest has been paid to that individual on behalf of representation capacity, that means instead of paying interest to the HUF, the partnership firm has paid interest to that individual, then, my dear lovable students, that will be within the ambit of section 40B. I am reading one more explanation for your benefit. X is a partner of a firm in his individual capacity and not as a representative partner. That means I am a partner in a partnership firm. That's it. Interest is paid by the firm to him in respect of deposit made by his wife. So, interest has been paid. Who made the deposit? Wife has made the deposit. This will be allowed as a deduction because such interest is received by him purely on behalf of another person. This will not be taken into consideration for the purpose of section 40B, that is 12%, because for some other person is getting the interest, my dear lovable students. I am doing one more question, two more questions for your better understanding. Mr. X is a partner in a firm on behalf of his HUF. So, is this partner as individual capacity or partner as representation capacity? Partner in a representation capacity. Mr. X has given a loan to the firm out of his self-acquired fund and the firm pays interest of 10,000 to Mr. X. But the loan has been given on individual capacity, not on representative capacity. The firm also pays interest of 15,000 to Mr. X on the capital of HUF. But this 15,000 has been paid as interest by the firm to the partner on representation capacity, not on individual capacity. So, in this case, 40B will not be applicable to the interest payment of 10,000 because that interest has been paid as individual capacity, not as representation capacity. 10,000 interest is allowable under 36 subsection 1 clause 3 subject to 40A subsection 2, that is related party transaction. The interest payment of 15,000 hour is subject to the provisions of 40B. Explanation 2 to section 40B. Brilliant to the core. With this, we have done with explanation number 1. What explanation number 1 is saying? Is the partnership firm paying interest to the partner as individual partnership, individual capacity? Sir, individual capacity, such interest will not be counted for 40B. Is the partnership firm paying interest to the partner on representation capacity? Yes, then provisions of 40B will be attracted. I am moving into explanation number 2, the second leg of discussion. Where an individual is a partner in a firm otherwise than as a partner in a representative capacity. I am an individual, I am a partner in a firm not as representation capacity but as individual capacity. Interest paid by the firm to such individual shall not be taken into account for the purpose of section 40B if such interest is received by him on behalf of for the benefit of any other person. I am a partner in a firm not as a representative capacity but as an individual capacity. Partnership firm needs some loan. I borrowed some loan for the benefit of the partnership firm and I get that interest for some other person, then that will not be covered under 40B. For example, Mr. X is a partner in a firm in his individual capacity. He is also the Karta of HUF. Fine, possible. I am a partner in a firm and I am also a Karta of HUF. The firm pays interest of 10,000 to Mr. X on the loan given by HUF to the firm. So the firm pays interest of 10,000 to Mr. X on the loan given by HUF to the firm. Who gave the loan? HUF gave the loan to the firm. So firm is paying, instead of paying interest to HUF, they pay interest to the partner Mr. X. The firm also pays 15,000 to X on his capital in the firm. That will be within the limit of 40B. In this case, 40B will not be applicable to interest of 10,000. The said interest is deductible under 36 subsection 1 clause 3 subject to provisions of 40A subsection 2. Interest payment of 15,000 will however be subject to the provisions of 40B. This is the connected provision, my dear lovable students. So under section 40B, sir, we are having two explanations. Shall we have a very quick summary for 2 to 3 minutes of what we are doing? Very simple. We are talking about assessment of partnership firm. With regard to assessment of partnership firm, 2 extra item can be debited to P&L account. 2 interest on capital and remuneration to partners. This interest on capital at maximum 12% simple interest, my dear lovable students. And remuneration to partners, it is as per sir book profit. That book profit can be classified into 2 categories. Number 1, first 3 lakh and the balance on first 3 lakh, my dear lovable students, sir, either loss or profit. Is it loss? 1,50,000. Is it profit? Then 90% of the book profit, sir, whichever is higher. So 1,50,000 in case of loss or 90% of book profit, whichever is higher, is a limit allowed. On the balance, 60%. Fantastic to the core. And interest on capital, 12% simple interest. To govern this, we are having 2 explanations. Explanation 1 and explanation number 2. Explanation number 1 is saying that there is an individual. That individual is a partner in the partnership firm as sir, a representative capacity and not as individual capacity. So any loan has been given by this individual directly to the partner as individual capacity, then partnership firm has to give the interest. That is not covered under 40B, whereas if the partnership firm is paying this individual as interest on capital for representation capacity, that will be within the limit of 40B. Next one, I am an individual, I am a partner in the partnership firm, not as representative capacity, but as individual capacity, but some other person has given loan to the partnership firm, but that interest I am getting, then that will not be within the limit of 40B, but for my capital, if I get any interest, I am liable for, sir, that amount is within the limit of 40B. This is the max to max, very simple area for examination, connected provision man. 28 clause 5, profits and gains of business or profession. Now, any interest, salary, bonus, commission or remuneration due to or received by a partner of a firm from such firm shall be accessible under the head PGBP. Already we have discussed. Now this remuneration to partner can be debited to P&L account in the hands of the partnership firm. Correct. Now this salary, this interest, this bonus, this commission or this remuneration will be treated as income in the hands of the partner under the head PGBP, provided that where any interest, salary, bonus, commission or remuneration has not been allowed to be deducted under 40B, the amount not so allowed to be deducted shall not be added to the income of the partner. That means to the extent whatever amount treated as income deduction in the hands of the partnership firm, only to that extent it will be treated as income in the hands of the partner. எந்த அளவுக்கு பார்ட்னர்ஷிப் ஃபார்ம் கையில டிடக்ஷன் கிடைக்குதோ அந்த அளவுக்கு அந்த சேம் அமௌண்ட் பார்ட்னர்ஸ் கையில இன்கமா ட்ரீட் பண்ணுவாங்க. PGBP ல ட்ரீட் பண்ணுவாங்க. 28 clause 5. 10 to a share from partnership firm is exempt from tax. In case of partner of a firm, his share in the total income of the firm shall not be included in the total income of the partner. Keynotes, share of partner in the total income of the firm shall be computed as under total income of the firm into share in the profit of the firm as per the partnership deed divided by profit of the firm as per the partnership deed. For example, if 5 lakh rupees is the profit, if my percentage is 20%, 5 lakh into 20% is the my share of profit. That's it. I'm having one question for understanding. Illustration number 1. Whatever we have discussed will be that. The partnership firm of the firm does not specify the remuneration payable to each individual partner, but lay down the manner of fixing remuneration as follows. That means இவ்வளோதான் amount of remuneration சொல்லுதில்ல, but இந்த மாதிரி ஒரு paragraph சொல்றாங்க. In case book profit of the firm are up to 3 lakh, partners will be entitled to remuneration of 1.5 lakhs or 90% of book profit, whichever is more. In respect of balance, it is 60%. Book profit shall be computed as defined in 40B of the Income Tax Act. In case there is a loss in a particular year, partners shall not be entitled to any remuneration. Remuneration payable to working partners should be credited to respective account at the time of closing of the accounting year, and working partners shall be entitled to equal remuneration. Can the firm claim deduction in respect of remuneration paid to the working partner? Yes, because as per the Income Tax Act, there is no need of specify the amount of remuneration. There is need of the deed should authorize the remuneration. As per section 40B, payment of remuneration to a working partner which is authorized by or in accordance with the terms of partnership deed is allowable as deduction to the extent it does not exceed the limit specified in 40B subsection 5. The issue under consideration is in a case where partnership deed does not specify the amount of remuneration. Open remuneration 10,000 per month, 20,000 per month அப்படின்னு சொல்லுதில்ல. Payable to each partner, but lay down the manner of fixing the remuneration. Can payment of such remuneration be allowed as deduction is the question. CBDT wide circular number something by something clarified that no deduction under 40B subsection 5 will be admissible unless the partnership deed either specify the amount of remuneration payable to each working partner. அப்போ ஒரு இண்டிவிஜுவல் ஒர்க்கிங் பார்ட்னருக்கும் ஐதர் ஓப்பனா இவ்வளவுதான் ரெமுனரேஷன் அப்படின்னு பார்ட்னர்ஷிப் டீட் சொல்லணும், ஆர் லே டவுன் த மேனர் ஆஃப் குவான்டிஃபைங் சச் ரெமுனரேஷன். இல்லைன்னா அது எப்படி கால்குலேட் பண்ணுங்கிற ஃபார்முலாவாவது பார்ட்னர்ஷிப் டீட்ல சொல்லணும். நம்ம கேஸ்ல ஃபார்முலா சொல்லியிருக்காங்க, அதனால டிசலவ் பண்ண வேண்டிய அவசியம் இல்லை, அலோவ் பண்ணிக்கலாம். Conclusion. Therefore, in this case, since a partnership deed lay down the manner of quantifying the remuneration payable to working partner, the firm is entitled to claim deduction of remuneration paid to working partner subject to the limit specified in 40B subsection 5. Brilliant to the core. I'm moving into illustration number 2. A partnership firm consists of 3 partners, X, Y, and Z. Is engaged in business of manufacturing and selling toys. Turnover for the business year under 31st March amounting to 55 lakh. Bad debt written off in the books were 75,000. Interest at 12% provided to partner Z on his capital 6 lakh was authorized by the partnership deed. The firm had business loss of 50,000 and unabsorbed depreciation of 1,50,000 carry forward from assessment year 23-24. The firm did not pay tax under presumptive tax system in assessment year 23-24 as conditions of 44AD were not fulfilled for assessment year 23-24. The firm opts to presumptive taxation under 44AD for assessment year 24-25. Compute the income of the firm chargeable under the head PGBP is the question. Point number 1. What would be the tax liability of 234B&C if the firm had not paid any advance tax? This is a brilliant question according to me. So they have given the turnover and they have not mentioned anything about in what mode the receipt has been received. So we are assuming that by cash we have to put higher rate. Computation of income from firm chargeable under the head PGBP. Presumptive income under 45AD. They themselves mentioned that 55 lakhs is the turnover. So my dear lovable students, 55 lakhs into 8% comes to 4,40,000. A partnership firm falls within the definition of eligible assessee under 44AD. Are you remembering who and all are eligible assessee? A resident individual, a resident HF, a resident partnership firm except LLP. So this guy can travel through 44AD. Brilliant, sir. The threshold limit of turnover for applicability of presumptive taxation scheme under 44AD is 2 crore. Yes. If without seeing the cash limit, it is 2 crore. But for our examination, they have increased to 3 crore, my dear lovable students, if the total cash dealings is within 5%. In this case, since the turnover of the business of the firm is 55 lakh, it falls within the definition of eligible business and therefore the firm is eligible to opt for presumptive taxation under 44AD. 8% of total turnover would be deemed to be the business income of the firm. Right. Less interest under section 40B. Salary and interest paid to partner shall not be allowed from the presumptive income. Because what is presumptive taxation under 44AD? Sir, all the deduction under section 30 to 36 or 30 to 38 is deemed to be allowed and 40B will not be applicable for section 44 AD. So nothing can be claimed it as deduction under 40B. What is the book profit? Profit from the business or profession for the current year is the turnover into 8%, 4,40,000. Let's set off of brought forward loss under section 72. Further, business loss of previous year can be set off against current year business income as per 72. This is not within the ambit of 30 to 38 and 40B. Hence, since this is covered in 72, sir, you can set off 50,000. So the total income is 3,90,000. As per 44 AD subsection 2, all deduction allowable under 30 to 38 shall be deemed to have been allowed in full and no further deduction shall be allowed. Accordingly, no deduction shall be allowed for bad debt since the same is deductible under 36 subsection 1 clause 7 because that is not allowed. As per presumptive taxation route, we all know that it will be deemed an unabsorbed depreciation since the same is deductible under 32 subsection 2. As per 44 AD, provisions of advance tax will apply to an eligible assessee insofar as they relate to eligible business. Therefore, an assessee opting for presumptive taxation scheme under 44 AD is required to pay advance tax. However, the assessee opting for 44 AD is not required to pay advance tax in multiple installment, that is 4 installment, but they are required to pay the whole amount of advance tax on or before 15th of March of the previous year. Therefore, in this case, firm is required to make advance tax payment. Accordingly, there will be liability for interest under 234 B and C in case of delay of payment of advance tax. We have discussed everything in detail already. My dear lovable students, sir, 44 AD is applicable to resident individual, resident HUF, resident partnership firm except LLP. And when they are calculating the presumptive income, 30 to 38 deductions are not allowed. 40B also not allowed. They are supposed to pay advance tax, not in 4 installment, but in one go, my dear lovable students. I am moving into illustration number 3. Work out the taxable income for assessment year 24-25 of a partnership firm engaged in retail trade from the following particulars. Net profit 3,65,000. Arrive at after debit of interest on capital of partner of rupees 4,80,000. Total capital of the partner on which interest paid as debited to P&L account was 10 lakh. So on that 10 lakh, we know that only 12% is allowed. So 1,20,000 is allowed. In place of 1,20,000, they have debited 4,80,000. So we have to add back 4,80,000 and we have to reduce 1,20,000. So what is the net profit as per P&L calculator? 3,65,000. What is the interest amount debited to P&L account? 4,80,000. So plus 4,80,000, subtotal is 8,45,000 minus what is the interest allowed? 10 lakh into 12% comes to 1,20,000. That means 7,20,000 is the taxable income. 7,20,000 is the taxable income. On this, if the remuneration is allowed, you can claim a remuneration. No problem at all. Fantastic to the core. I am moving into illustration number 4. A firm assessed as such had paid 7,50,000 as remuneration to partner for the previous year 23-24. In accordance with its partnership deed, it is a book profit of 10 lakh. What is the remuneration allowable as deduction? My dear lovable students, 7,50,000 remuneration pay பண்ணிருக்காங்க, but 10 lakh rupees book profit இருக்கு. But 10 lakh class into 2 category, 3 lakh and 7 lakh. On that 3 lakh, we know that either 1,50,000 or 90% of book profit, whichever is higher. So 2 lakh, how much rupees? 70,000. On the balance, 7 lakh, 60% man. So 4,20,000. So 2,70,000 plus 4,20,000 means, sir, 6,90,000 is the maximum allowable remuneration. But they have debited 7,50,000, so you have to add back 7,50,000 and you have to claim 6,90,000 rupees as remuneration. That's what they find out, 6,90,000. So the allowable remuneration calculated as per the limit prescribed in 40B subsection 5 would be on the first 3 lakh of book profit, 3 lakh into 90%, 2,70,000. On balance 7 lakh of book profit, 7 lakh into 60%, 4,20,000. Subtotal is 6,90,000. The excess amount of 60,000 would be disallowed as per section 40B subsection 5. Moving to the second question. Rao and Jane, a partnership firm consists of 2 partners, reports a net profit of 7 lakh before deduction of the following item. So net profit as per P&L account is 7 lakh. Okay, fine. Before claiming this item, salary of 20,000 each per month payable to 2 working partner of the firm as authorized by the deed of partnership firm. I am going to calculate the salary only, so I cannot reduce salary. Depreciation on plant and machinery under section 32, 1,50,000. This can be reduced, my dear lovable students. Interest on capital at 15% per annum, only 12% per annum is allowed. As for the deed of partnership, the amount of capital eligible for interest is 5 lakh. So less 5 lakh into 12% comes to 60,000. So 7 lakhs minus 1,50,000 minus 60,000 comes to 4,90,000 is the book profit. On this 4,90,000 we are having 3 lakh and 1,90,000. 3 lakh 90% comes to 2,70,000. 1,90,000 to 60% comes to 1,14,000. So 2,70,000 plus 1,14,000 comes to 3,84,000 is the remuneration. So your answer is book profit is that much. 3,84,000 is the answer. That's it. They have given calculated in detail. You can read this and you can find out very easily, my dear lovable students. The special provision of section 40B also comes to an end. Residential status done, tax rate surcharge done, special provision to the firm done, section 40B done, set off and carry forward of loss 78 subsection 1. Carry forward and set off of loss in case of change in constitution of firm. That's what we are going to discuss. Sir, in Income Tax Act we are having a rule. The person who has incurred the loss should only carry forward and set off the loss. யார் loss incur பண்ணிருக்காங்களோ அவங்க தான் carry forward பண்ணணும், அவங்க தான் set off பண்ணணும். Where a change has occurred in the constitution of firm, then nothing shall entitle the firm to have carry forward and set off so much of the loss proportionate to the share of retired or deceased partner as exceeds his share of profit in the firm in respect of previous year. This is what the provision, what 78 is saying. Section 78 subsection 1 provides that when there is a change in constitution of the firm, for example, ஒரு partner retire ஆவறாரு, admit ஆவறாங்க, take place on account of retirement of partner or death of the partner. In this situation, only retirement and death is covered. Then the firm shall not carry forward and set off the following brought forward losses. Share of retired or deceased partner in the brought forward loss of the firm. Less share of retired or deceased partner in the current year profit, that is subtotal. That is the net loss cannot be carried forward. How to compute that net loss, sir? Illustration number 1 will answer for us. A firm furnishes you the following data for the previous year 31/2024. PGBP before set off brought forward depreciation and brought forward business loss 8 lakh. அப்ப 8 லட்சம் ரூபாய் current year. Brought forward loss of assessment year 18-19 last year only 3 lakh. Brought forward depreciation 1 lakh. This is very important. Brought forward depreciation. There were 4 partners A, B, C, D sharing profits and losses equally, that is 1:1:1:1. On 30th June 2023, the partner A had retired from the firm. Partner A had retired from the firm. Compute the total income of the firm is what the question. So on 30th June, that means April, May, June, he was there for 3 months. So current year you are having profit. On that profit, my dear lovable students, that guy is having 1 share. So only the net loss should be put it on dustbin. By virtue of 78 subsection 1, the firm shall not carry forward and set off the following loss. What is the share of retired partner in the brought forward loss? The total is 3 lakh. So 3 lakh into 1/4. Why 1/4? All are equal partners. So 3 lakh into 1/4 comes to 75,000 is the share of retired partner, my dear lovable students. Share of retired partner loss. This amount should be put it on dustbin. But share of retired partner in the current profit, he is having profit. The total profit is how much lakh? 8 lakh. In this 8 lakh, this is for the entire year, correct? The profit I have to find out only for how much months? 3 months. So 8 lakh into 3/12 means I am having profit of 2 lakh. In that profit, I have to calculate or allocate between 4 partners. So into 1/4 comes to 50,000 is the amount, man. 50,000. That means the net is 25,000. So that partner has earned a loss of 75,000. That partner has earned a profit of 50,000. So that partner were not able to recoup 25,000 since that partner has retired or deceased. That amount of 25,000 has to be put it on dustbin. So therefore 25,000 cannot be carried forward and set off by the firm. It may be noted that section 78 subsection 1 is not applicable to brought forward depreciation. Very important point. That is not applicable to brought forward depreciation. Now the income of the firm for assessment year 24-25 is as under. Current year PGBP 8 lakh. Less brought forward business loss total 3 lakhs. In that the share attributable to the deceased partner or retired partner is 25,000. Put it on dustbin. 2,75,000. Brought forward depreciation is 1 lakh. Sir, provisions of 78 subsection 1 is not applicable to brought forward depreciation. So the total comes to 4,25,000. With this, my dear lovable students, we have done the chapter that is assessment of partnership firm. Here we are having illustration number 1. Here we are having illustration number 2. Here we are having, sir, illustration number 3. Here we are having illustration number 4, and we are having one more, my dear lovable students, illustration number 5. This has been given as practice question. If you are thorough with PGBP, capital gain and IFRS, this is exactly the same of computation of total income. We have already done the computation of total income, my dear lovable students. So exactly the same. There if you are having control, here also you will be having control. So you itself can try those questions, my dear lovable students. After, if you are thorough with this part, or in the coming slot, I will be putting that as one lecture. If you are having any doubt, you can go through that in a question answer session. This will be coming for 14 mark in examination or a separate 10 mark question for assessment of partnership firm. So if you are thorough with this 5 additional information regarding the partnership firm, you will be comfortable, feeling so much comfortable. So with this we can say that assessment of partnership firm comes to an end.